What is going on, YouTube? Happy Saturday to you. Futures Brizio here. It is 12:40 p.m. on Saturday, July 18th, 2026. Hope everybody had a great week. Before we get started, as always, make sure you smash that like button, subscribe to the channel. Any questions, comments, leave them down below. Now, I am recording this video on Saturday, early Saturday afternoon. I'm probably going to schedule it to post later. It doesn't really matter because the market's closed. So whether I drop it now or later today or tomorrow, so I may change the schedule, but it's still going to apply, obviously, because again, we're over the weekend. I did just record a video, which by the time you see this, I'm hoping should be posted. I did kind of another Saturday live video, just chat video. And I was talking about fake YouTube trading gurus and just kind of general observations. And I'm really curious to know if you get a chance to watch that. Obviously, make sure you like that video too. And, leave some comments about it. I'm really curious. I mean, I get very few comments, so whatever. I don't really care. Are there any of these gurus that you follow either for comedy or because you actually, believe and follow what they say? Have any of them where you've bought whatever they're selling and regretted it later, or has it worked for you like long term? I don't mean like for a week. I mean over the long term. Have you ever signed up and regretted it? Have you ever bought into their, clicked in one of their affiliate links for some shady broker or prop firm or whatever? So just curious to know. So let me know what you think. Watch that video. It should be hopefully posted in the live section of my channel by the time you see this. And I like doing those live videos, just kind of just random thoughts. Um, and it's good. Like I said, a lot of my videos just talking to myself, but I like to just put it out there and just get stuff off my chest. And if I can help out a couple of people, then I've done my job. So, well, like I said, I don't sell anything on this channel. I've been saying since I started this channel many years ago that I don't sell anything on here. I never will. I'm never going to sell a course or a mentorship or a Discord channel. I'm never going to, sell an affiliate link for a broker or a prop firm. I just don't want to do that. I have no desire, which of course will limit my channel. I understand that. But again, I'm not doing this to make YouTube ad revenue either. So, anyways, that's that. Check that out. Let me know what you think. I just want to do a quick review. Yesterday, I did not record a video yesterday. Markets were pretty quiet. I did not take any new Forex trades. I took one futures trade, which I didn't hold very long. I just had a hard time. Getting any real momentum going yesterday. There's probably a couple of things I could have taken, but I was a little busy besides that. So I was on the charts for a couple hours in the morning. And of course, it's Friday too. So I'm very cautious about taking new trades on Friday, especially after like late morning, because the markets just kind of peter out by the afternoon, no matter what the market is, because, it's Friday, the volume drains out and that's it. And any moves that happen after that are probably not going to be sustained. And, you're going to just be really frustrated. So that's why I didn't really take anything new. If I don't get anything like pretty early on in the session, then I'm probably not going to take it. So, all right, so let's just start with Forex. And again, we're continuing on the same thing here. I am playing around with the range bar interval period. I've been recording most of my videos using this number here at 500. And again, guys, I'm not going to rehash all this again, but range bars are basically price-based candles where price has to move a defined amount before a candle will print, okay? Now, it uses what they call a range interval, and right now you can see it set at 250, right where my pointer is. In the Forex market, a 250 range is 25 pips, okay? So you got to move the decimal point over. So 250 is 25 pips, okay? So every one of these candles is 25 pips. And the market will not draw a new one until the price has moved 25 pips. As soon as it does, it's going to print the candle. So if price is rapidly moving, let's say it moves 100 pips in a matter of 5 minutes, well, in 5 minutes, it's going to paint 4 of these candles, right? 25 times 4 is 100. So it could either move very slow or it can move very fast, okay, in terms of how often it prints these candles. But it won't print one until it moves at least that distance. Well, exactly that distance. As soon as it hits that distance, it's going to print the candle and then it'll wait for that again. So again, in Forex, 250 is 25 pips. And this is about the equivalent of trading on about a 4-hour time frame. So if I opened up a 4-hour chart, this happens to be the New Zealand Canadian. If I opened a 4-hour chart and put it side by side with this, you could see it'll be pretty close just in terms of the overall flow. Okay, and I've done this a couple of times. So let me do that just so you can see. So I need to go over here, change this to New Zealand Canadian, and then change this to candlesticks. Okay. And we'll zoom this one in a little bit here. All right. Now, if you just look at the overall flow here, again, it's not going to be exact, but if you just like start from this high, and you can see my cursor is synced up with the channel. So the chart on the right, oh, wait a minute, I got to change the time frame here. And we got to zoom out. Okay. So the chart on the right, the purple and blue candles is a regular 4-hour candlestick chart. And the chart on the left is the 250 range bar. And again, you can adjust this a little bit, whether it's 200, 250, whatever. But you can see overall the flow is pretty much the same. Okay. In terms of like starting here and down, then this move up and then this down, right? So it's about the same. So even though the range charts are not time-based, you can almost mimic the speed of a time-based chart based on the interval setting. So whatever your trading style is, if you like to scalp or day trade, well, you probably want to move this down to like 20, right? So that the chart's going to be much faster. Okay. A 20 interval is 2 pips. So that means every time price moves 2 pips, it's going to paint a new candle. Okay. So you kind of get the point. So 250, 200, 250 is the equivalent of about a 4-hour chart. 500 is equivalent to about a day chart. Okay. So if you're more of a position swing trader, you can set this to 500. If you're more of an intermediate swing trader, then you can put this at like 200, 250. It just depends what you want to do. I've also toyed around with having, like 250 on this side and 500 on this side. And so, but, I don't like having too much in front of me that just gets confusing. So anyways, that's your crash course on range bars. And that's how you can, even though again, it's not time-based, you can set the interval to kind of mimic time-based trading, regular candlesticks, but still have the advantage of these range bars. Okay. So let's just go through this really quick. And so it's kind of what I'm looking at for next week, at least either on a watch list or what could be potentially trades already happening. This is Kiwi Yen. You can see we've got, this very well-defined uptrend here. We've got this green candle that painted. And here's an example, right? This candle painted at 5 a.m. yesterday morning, okay? 5 a.m. yesterday. So during the London session, even before New York, it never painted another candle the rest of the day. And again, this is a 25 pip candle. That means the New Zealand yen did not move more than 25 pips in any given, outside a 25 pip range the entire rest of the day, all through the New York session. It didn't move. If you turn this into a regular candlestick chart, you would see that, and put it on a short time frame, like an hourly time frame, you would see that it's probably just stuck in a very tight range. In fact, if we do that, yeah, so here is the hourly chart, and you can see it really didn't do much, right? Just these really small candles, then it came up, but really the entire day, let's say from 5 a.m., where's 5 a.m. yesterday? Because that's how we need to mark it. Okay, so this was 5 a.m. right here, about where this arrow is. So this right here was the trading yesterday, okay? So we had this move. This is obviously what caused that one candle to paint, but you can see the rest of the day it did nothing. So you had all this price action can be consolidated into this right here. Okay. So you see the power of that. It just makes it so much cleaner. And you're not looking at all that noise getting sucked into a trade that's not there and just trading noise, right? Here, okay, so this is a potential entry. I'm not in it, but it is a potential entry, right? Because we're trading up, blah, blah, blah. And so what I like to see, and I don't do this universally, but I like to, especially in futures, because I use a smaller range in futures. I like to see a second candle go in that direction. But of course, if you see a second one, now you're increasing your risk. Because let's say I want to wait for the next candle to paint another 25 or so. Say that paints and it brings you up back up to around this high. Well, maybe you've already missed the move. Maybe it hits this high and pulls back. So where if you take this one, your stop loss presumably would go somewhere down here underneath here. And if it continues to go down, yes, you'd get stopped out, but you'd have, basically a 25 or 30 pip stop loss in this case. Okay. Whereas if you let it go another candle, well, now your risk, and assuming you put your stop loss in the same place, now you've got a 50 pip stop loss instead of a 25. But there's give and take to that, right? Because if you go in right here, yes, your stop loss is smaller, but there's also a possibility that this rolls over and the next candle is red and it keeps going down and you get knocked out anyways. Where if you wait for a second candle, you might get better confirmation, but maybe now at that point you've missed the move and your stop loss is bigger. So you got to pick your poison. But either way, this you can just see the clarity in this up move, right? How clear this is. Now that's with 250. If I switch over to 500, I'm going to lose a lot of this definition. On the 500, we only had basically this candle way back here and this one here, single pullback candles. And then you could have entered at the next green candle right here. So it all depends how often you want to look at charts. This is perfectly valid too. If you recognize this is a strong uptrend and you know that, you're only going to get one candle pullbacks, well, then you just wait for the next candle to basically break the close of the previous candle. Like, so right here, you go right long right here, and then this would have been golden. Okay. And then you have this one here. Again, another one candle pullback. It closes right here. The next candle comes back and closes right here. You could have gone long here and still be holding this trade. And you'd already be up, you'd already be up 150 pips. Because remember, right now I'm on a 500 range, which is 50 pips. So 1, 2, 3 candles. That's 50 times 3, 150 pips on these 3 candles. Okay. So it just kind of depends what you want to do and how much detail you want to look at. There's good and bad to everything. If you use the shorter one, you could get fooled and take a trade too early and get, pulled into a false signal. But if you use the higher range, it's quite possible you're going to miss some trades because you're not getting that detail of the shorter range. Much like if you use a longer time frame on a regular candlestick chart, if you're using the daily versus the hourly, you're going to get a lot fewer trades on the daily because you're not seeing that detail and you're waiting for certain things to happen. If you trade on the hourly chart, you're going to get a lot more trades, but that doesn't mean they're always good, right? So that's that push and pull, and you have to kind of decide what works for you. Okay. But anyways, that's New Zealand yen. I'm just going to go through. I wrote down a list here. Here's another one. This is pound US dollar. Yeah, this has been a pretty aggressive move to the downside. But again, if we just get back to market structure, this is still a bullish market. We had this really big move out of here. Again, these are 25 range bars, 25 pip range bars. So we've got 1, 2, 3, 4, 5, 6, 7, 8. So that's 200 pips from the close of this, from this candle on up is 200 pips. We had this pullback here. Okay. And now we painted this green candle. And again, look at the time on this. This was at 6:41 a.m. yesterday morning. Okay. 6:41 a.m. Look at down at the bottom. 6:41 in 1 second. This candle painted. We did not get another one the entire rest of the day yesterday. So that means from after 6:41 a.m. yesterday, this asset did not move more than 25 pips the rest of the day. Okay, so think about that. This is the pound US dollar. This thing can easily move 100 pips in a day, right? And it didn't move more than 25 pips after 6:41 a.m. So think about that. If you're looking, unless you're scalping, look, if you're scalping on a 5-minute chart and you knock this number down to like 10 or 20 range, where you're trading on, 1 or 2 pip range bars. But I'm talking about people that, even day traders, forget about swing traders for sure, but even a day trader, this is something where you like just keeps you out of the market. The price didn't do anything. So you get sucked into something on a regular candlestick chart, and then it doesn't go anywhere. And you're holding on to a trade that's dead in the water. Either you're in loss or break even. And, you got in hope, thinking that, oh, here we go, we're going to move, and then it does nothing. And then you have to decide, am I going to hold that risk over the weekend? Right. So that's the power of these range charts, that they just keep you out of the noise. Right. So what am I looking for with this? Well, you can see I've got this up arrow. So naturally my bias is long here, just because I'm looking at what it did and that this is just a nice pullback. The market structure hasn't been invalidated. What would I like to see? I'd like to see another green bar potentially paint, okay, and just kind of tell me that the momentum's up. But, when the market first opens on Sunday, who the hell knows what it'll do? The nice thing about these bars, again, there are no gaps on the chart, unlike the regular candlestick. So it does prevent any gaps, just because, again, they're not time based. Um, so anyways, but again, you could just go long right here, put your stop a little below here, give it some breathing room and in case, and then see what happens, right? But my bias here, just looking at this on the surface, is long. Okay. New Zealand USD is the same thing. Now, this one is in a pullback phase, but again, look what we get here. Like most of these pullback, two candles, then up. We did get another one here. So there was a little bit more liquidity sweep right here. Two candles up. Now we made a new high, two candles. So now this one, I'd probably be looking on the next green candle it paints uh, to take along. Now, you got to use some cautiousness here, right? If you look to the left, we do have major structure right here. We have a previous swing high that led to this low that we're sitting at. So naturally, price is going to react off of these levels because everybody sees this, right? So people are sitting with take profit levels here. If they were long, they're sitting with sell orders to go short off of here, thinking they're going to catch a reversal off this level. So ultimately, I don't know what it's going to do, but I have it on, I have to respect this uptrend. And so a lot of times what happens here, yes, it could just reverse and come all the way back down. But at the same time, it could just pull back off of here. Then the buyers will reload and then will pop and go right through this level. And this tends to be more of a retail chop when it's like halfway between a major swing high like this and this low down here. This choppy stuff tends to just be retail noise. And many times this ends up getting broken, but not always. So, but it is on my watch list for a potential long entry. And if it does get through here, then you're probably pretty safe to trade this back up towards these old highs up here. All right. So that's that. Aussie yen is much like the pound US dollar, so I'm not going to dwell on that. You can see it's kind of the same thing. Now, you could say, well, we broke market structure right here. So we'll see. But, we did have this very aggressive move up. And this might have just been a little pullback in this overall move up. So again, this is why maybe I wait for another green candle to confirm and then watch this hopefully go higher. But I'm not in any of these trades at the moment. I think I am in Euro Canadian. I think that's the one I'm in. So Euro Canadian has been in this nice downtrend. It did pull back here. And so I do think that this has more room to run to the downside, at least back maybe towards these lows. So I'm looking at this as a corrective move, and I'd be waiting for this correction to end. Now, whether it goes up, you can see sometimes you get one candle, but a lot of times we're getting 3, 4 candle pullbacks. So this thing may run up a little bit here and then maybe roll over and go back down. So I'm still bearish this, but we're definitely in a pullback phase here. Euro yen has been very messy, very, very messy. Overall, this is just very choppy, but you can see, to me, this is a very corrective move right here with these big range bar wicks. Price tries to go high, rejects, goes high, rejects, tries to go higher. Next candle comes back bearish, breaks structure, and now it looks like maybe the buyers are taking control here. We're starting to go higher. So I am at least short-term bullish on this. However, I do point out, looking to the left here, we have major swing highs sitting just above here. So while this may push up and we may get a couple of candles to the upside, I think it's going to run into a lot of trouble here at this level. So even though I'm watching it as bullish, I'm not sure I would take this entry anyways, just because of how close we are to to these old highs where we've had price reject off here 1, 2, 3 times since June. If you go back, this is June 2nd of this year. So this only goes back, right? Yeah, June 2nd, 2026. Right. So this only goes back about 6 weeks ago. All of this price action. It's not that long ago. We had 1, 2, 3 rejections off of this, 186, 186.5 area. So while it's on my watch list, I'm not necessarily sure I would take it. So we talked about Euro CAD. Okay. And that was Euro Yen. Okay. And then Pound CAD's the last one. So Pound CAD is really interesting, right? We've got this big move out here. Now it did form a lower high right here, but so let's see if we get a little bit more of the upside. Now, if it comes down here and it takes out these lows, especially if it breaks this low, then we're probably going to go lower. So again, I have this looking a little bullish right now, but essentially we've got 100% retracement of this up move. Right, we went up, came all the way back down almost to the origin. So the question is, what's it going to do now? So again, I have this arrow. I don't want to be too deceiving on this. It's just an initial thought. I'd probably like do this. We'll just do that now. We'll put an alert right here if it breaks these lows. And I'm not going to put one to the upside. I'd like to see like a nice full engulfing bull candle here. And then I probably might think about a long. But I don't know what that's going to do. But it's on my watch list. Okay. And then I do have a couple other ones that are, let's see. So this is Euro Aussie. Again, we're in this downtrend, came up here, rejected off this. So let's see whether this is a true rejection point. We continue lower, but it's on my watch list for a downtrend, continuation. Swiss yen, I'm just looking at this for, maybe a potential top. You can see this area around the 201.50 zone has rejected numerous times, and it looked like it's trying again. We had at least 2 attempts to go higher and failed. So I'm looking at that this whole area could be like a failed new high, and that will start going lower. And so it's on my watch list. I'm not saying I'll be taking it. Again, these are a little bit further out, okay, but I'm watching them. Pound Aussie, I really like these. So when it gets into these really structured sideways markets here, these are really cool because this is a nice thing about range bars is they produce these nice sideways consolidations. Very easy to see. So I don't know which way it's going to go. And you do have to watch for liquidity sweeps. These are classic setups where even with range bars, you'll see a candle break below this zone a little bit. Even if it's not a wick, you might even get a body close just below this zone. It won't go far. And then if I get that, so let's say I get a candle to paint just below this zone, close below here, okay? I am not going to just take a short right there because the very next candle will come back with a big green candle and close back inside the range again. And then to me, that would be a false breakout, okay? And I actually would start to think about a long position. But if we do get a close below here, just a little below this line, whether it's a body or a wick, then I'll wait. If the next candle comes back and paints red again, lower, to me, at that point, I probably would think that it's going to go lower because usually those liquidity sweeps are going to happen on that first candle that breaks through, and then the next one will shoot right back into the range. And of course, the opposite is true for a long. Comes up here, throws a wick or a body just above the top of the zone, and then the next one comes back and a big red engulfing candle back into the range, then that's probably an upside false breakout, okay? Now, based on what the price has just done recently with this big bullish run up with multiple green candles, my bias on this is probably a little bit more to the upside. that this is just a pullback and now maybe there's some accumulation going on in here and then eventually they'll pop out of this. But I don't know. So we'll see. But that one's on my list too. And I do like these structures because they're very easy to watch and wait for, the breakout to happen. And then we've got New Zealand Canadian, which is very similar. It's a little bit bigger range, but still we're trading inside a pretty well defined range here. So let's see what it does. And this is another one. Maybe you go to like to the 500, and on the 500, you can see this range, and you can see I do have alerts set above and below here. Now I am a little cautious again about going above here because again, looking to the left, we've got multiple touches on this zone. So if it does pop out of here to the upside, it's quite possible it gets up to this, 8250 area, whatever this is, and rejects. So I'm not sure how much I'd be jumping on board a short right now. I mean a long. I'd be more interested in a short. So if it does pop through and go higher, I don't know if I'd take the long, but if I did, my take profit would be pretty tight. I don't know if the risk to reward is worth it. And then I'll wait and see if it then fails and starts trading down. So again, it's on my watch list, but being on my watch list doesn't mean there's a trade, a pending trade. It just means I'm watching it, right? And I want to see what it does. Some are better than others. So, but this is what it looks like on the 250. And again, it's just stuck inside this range right now. So until it does something to break this range, I'll be cautious. But again, even if it does, we've got recent highs just above the top of this range where price is rejected multiple times. So I'd be a little cautious about long positions. Okay. So that's Forex. And that is that for Forex. Futures. We'll change this to 20 because I day trade these futures. So we'll change this over to 20. We'll turn the moving averages back on. And so this is wheat. You can see we're inside this box right here. I already had that drawn. So let's see. This tried to go higher after, these really, short pullbacks and up. Now we're kind of moving sideways. But, this is not unheard of. I mean, this is a pretty long pullback too. So we've got this here, and it looks like it's trying to break higher. So I would be, inclined to take a long here if it does want to break out of here. But again, be cautious of liquidity sweeps and false breakouts. Corn, this is another one. Broke higher, came back, okay, and then tried to go higher here. And, if we get some continuation here, this would be good. It didn't make it very far here, but I think if we can get through this range, I mean, I think this can go quite a bit higher. And this still looks pretty good. We're still holding the moving averages. We did not breach any market structure here, so that's still pretty good. I'm not a big fan of soybeans. We're kind of in this overall larger range here, so not really too big of a fan of that right now. And soybean meal, we might even be starting to trend down on that, right? This was our last big pullback. And now we're heading down. But again, this could just be a big pullback. This market can be very volatile. And, we have not broken market structure. I mean, if we look at this as our previous swing, there's no structure break here. So, even though the moving averages are kind of flattening out, I'm not sold that this is going to go down. This just could be a nice deep corrective move. So we'll see what happens here. And I'll be watching this. And then lastly, soybean oil. I think it's still in an uptrend. I mean, obviously the moving averages are very tilted up. We are having a more significant pullback here, but again, it's not unusual. We do have a lot of, times where the market will pause. And as we head deeper into this moving average band, to me is an even better setup for a long. And until we, if we start getting a series of lower highs and lower lows start moving through here, then that would be something else in terms of maybe shifting bias to the downside. But right now you have to respect this uptrend and, wait. And this is an example right here where I told you about sometimes waiting for a second confirming candle, because you can see, we had two red candles and then we paint this green one right here. And you're like, okay, uptrend is continuing. And then look what happened. The very next candle was red, red. And you probably at this point are either stopped out or you're in drawdown, right? Because it failed to go higher. So that's why if this one had come back and painted green right here and closed right here, then I'd probably be more apt to go long. It does increase your risk overall, but it is a nice little confirmation tool. And the other thing is the best pullbacks on these grains is when they pull back into the moving averages or even a little below them in this case for an uptrend, because that gives you a really discounted pullback to look into. When that green candle happens so far above the moving average, to me, that's also a warning sign that we don't have the momentum. This is just, buyers, retail buyers trying to come back in here. But the big boys are not ready to buy again. They want to push this thing lower and grab some more orders and get a cheaper price somewhere lower down here without violating the overall trend. So this is an example where I was talking about with Forex, even waiting for a second confirmation. Now, in something like futures where I'm using a smaller range size, 20R instead of 250, it's not going to take much to get that second candle here, to paint green, and I still would have plenty of room to the upside. So to me, I would love to see this come down a little bit more and then see like two green candles paint in a row, closing up near the highs. And then I'd feel much more comfortable about trading that than taking this one so far above the moving averages and without a confirming candle. And, if you had done that, like I said, you would be in drawdown right now because it immediately moved against you. Okay. So that's another nice thing about range bars. You can wait for confirmations. It can increase your risk and your stop loss size, but on the same time, especially on these shorter interval trades like what I'm using for futures, it's not unreasonable. All right, even for a stop loss to be a little bit bigger because you're dealing with smaller range candles to begin with. In Forex, it might be a little bit more because you're using bigger range bars, 25 or 50 pip range bars instead of two ticks like these, or 2 points like these. And so that's what you have to weigh, right? So, that's how I look at these. All right. So there you go, guys. There's the full wrap on Forex and futures, what I've got on my watch list or what I'll be looking for going into Monday. And we'll see if we get any trades here. And so that's it. All right. So any questions, comments, leave them below. Make sure you smash the like button, subscribe to the channel. And like I said, if you have, anything on this, you want to more explanation about, I need more coffee, guys, then, let me know and we'll go from there. Have a fantastic weekend. Enjoy, rest up, and we'll talk to you all soon.